You're listening to the Moneyweb Now podcast series with Simon Brown. Live streamed every weekday at 6:30 a.m.
It's Friday, 24 July. We got UK retail sales data due later this morning. I'm Simon Brown, coming at you live and loud from the Moneyweb Global Headquarters in Johannesburg, South Africa. On the show today, Kea Nonyana from PrimeXBT. We got the Mr. Price update. We got Anglo American and Kumba production update. And I want to quickly pick his brain before we go anywhere on why the market hated no change to our interest rates. Not the market, the rand. Mark Salmon, he is head of Special Situations Fund at Differential Capital. They purchased Cementation Africa out of the Murray & Roberts business rescue. Curious to how they structured the deal and what do they do with it? Do they list it in time? And then thoughts from him. Two significant AI breakthroughs in the past week. ChatGPT hacking Hugging Face and Kimi K3 launches out of China. This podcast is brought to you by Stand-Up Asset Management. Invest in more global opportunities through their partnership with JP Morgan Asset Management. Morning headlines, Moneyweb, Saab holds rate steady at 7%, balancing price pressure with the need to protect SA's economic recovery. Vote was 4-2 for no change. 2 months ago it was 4-2 to hike. Business Day, David Masondo resigns as PIC chair. Resignation comes ahead of board meeting on Monday. I don't think there's anyone left in the board to meet. Morning markets, US was red, S&P 1.2% lower, Nasdaq down 1.9%. Over in the east, all red, Sydney off 0.5%, Tokyo almost 3% down, Hong Kong 1.33% lower, Tencent 2.8% lower. Commodities mostly red. Gold futures 4,035. Brent is the green, $100.86. Platinum 1,592. Palladium 1,239. The rand is 16.83. Bitcoin 65,200. And top 40 opening call a red open 570 points or 0.6% lower.
Moneyweb Now on the money. Also available on podcast.
Tell you now with Kea Nonyana from PrimeXBT. Kea, appreciate the early morning time. Quickly back to the MPC decision yesterday. Everyone I spoke to, everybody said that we were going to get a hike. I expected that too. I didn't want it, but it's what I thought would happen. And then we didn't. We got a no change, which shocked everyone. Weakened the rand market, weakened our bond market. Why didn't the rand and the bond market like it? Is this just the hot money economy?
Yeah, I think, when you looked at the bond market prior to the Saab rate decision, you did see quite a lot of selling pressure because you saw a remarkable increase in the 10-year government bond. I think it was trading in between the ranges of about 8.75 to about 8.85. Yeah. And I think the rand prepared itself for a rate hike more than any other time because I think we always kind of understand how hawkish the head of the central bank really is because he's quite a normative economist. So I think with the print of the inflation breaching the 5% mark and seeing the yearly inflation top out in Q1 2027 at about 4.7%, the tolerance between that 1% tolerance is far breached. And even if you look at long-term inflationary effects, so I think the market just expected that there is going to be a 25 basis point rate hike, and also a 50 basis rate hike was actually discussed at the last meeting. So I think it is just a confluence of all those things happening that really just seeped into the rand late when the rest of the equity market started to sell off into the US Open.
Yeah, and you know what? We will take the no change. We will absolutely live with that. And a slightly weaker rand makes us a little more competitive. Not the worst thing in the world. Let's move to that equity market. Anglo American coming with their production update. This is becoming very much a copper story. They are getting better cost pricing on their copper. We've certainly seen copper prices running. The copper was really a good part of it. There's also iron ore, which of course is the Minas Reals and Kumba. Thoughts on Anglo and Kumba updates?
Yeah, I think the core strategy really has changed. I mean, they're using iron ore, particularly because iron ore is so cash flush. Kumba is really cash flush all the time, and they're using it as a cash buffer and essentially future-proofing their business by making it quite simplistic and very copper-weighted. I did quite an interesting exercise, and I really just started to chart the copper price, the copper price, the iron ore price, as well as Anglo's price. And if you look at the regression on that, it's getting closer to the 0.9, which is almost a perfect regression. And I think that's what they were aiming to do for the stock price. They wanted to essentially focus on quality iron ore, focus on quality in terms of the copper output that they get, and essentially they'll be able to compete with the likes of Rio Tinto and BHP, which are far larger in balance sheet and far larger in production.
I get your point around that. And I mean, they've still got De Beers, but let's pretend De Beers isn't there. They're frantically looking for a buyer. If anyone out there wants a diamond mine, they're going cheap. But there is that Anglo American is different to what it was. I mean, aside from, just to your point, the commodities that they've got, because of course, once upon a time they had platinum, once upon a time they even had gold. But it's just a much higher quality business than it was, just years ago.
And I think it's the shift to pure play future minerals. I think the new portfolio focus post restructuring is just looking at premium high grade iron ore, crop nutrients, the Woodsmith polyhalite project. I mean, the copper assets are really top grade if you had to really compare them to the likes of Rio Tinto and BHP Billiton. I think the other two are just behemoths, and I think they have far greater safety and defensive nature. These two are just so Anglo American is just so heavily weighted towards copper and iron ore right now.
And they're the weird metals. One's an AI, one's in a sort of infrastructure play. Let's change rates or change positions rather. MPC, Mr. Price coming with their trading update. This is the first one which has got some of their acquisition in it. I say the market's been hating on them, but yesterday Mr. Price got a little bit of love.
Yeah, no, man. I think when you walk around the street and you listen to most portfolio managers, most financial markets practitioners, what they're saying is our clothing retailers are cheap, and they are cheap, and I think they're cheap for a reason. I think the market has battered these stocks just purely because they've been quite capital destructive. And I mean, I think personally, once you go offshore, you must be so sure of your dominance in your home market and in terms of your competitive advantage that you're able to take it elsewhere. And for me, what our clothing retailers have done is just that they've had they've almost been gluttonous in the fact that they've had a lot of capital, done well in the South African market, and because they've done well in the South African market with no clear competitive advantage because it's quite fragmented, they took that capital and went elsewhere, and the market is punishing it right now, and I think they should keep on punishing them.
We'll leave it there. That's Kea Nonyana here, of course, PrimeXBT. Always appreciate the early morning time. And that's our poll today on LinkedIn. Mr. Price says the company got it right on this NKD acquisition. And it's early days. Maybe we'll wait and see. Long way still to go. And as Kea says, the market perhaps correctly punishing them. Have your vote. Have your say. LinkedIn. Give you money, smoother returns for Stanlib Asset Management. The Stanlib Flexible Income Fund's agile investment process preserves and grows capital in all markets.
Moneyweb now on the money.
Chatting with Mark Salmon, Head of Special Situations Fund at Differential Capital. Mark, appreciate the time. A couple of weeks ago, we were chatting around the business rescue, Group 5, Marion Roberts for the True Stories. We're chatting there with Worksman's attorneys. You were on the one side of the deal. Cementation Africa, part of Marion Roberts. You got them out of business rescue, 1.27 billion, about 2,000 jobs. The thing here, it wasn't so much the business. This was a good business. It was a capital structure that just had simply too much debt, and you spotted an opportunity.
Yeah, Simon, thank you. That's exactly right. The two mining services businesses within Marion Roberts, in fact, there were three operating in South Africa, South America, and North America, were and are still very, very good businesses, and invariably had been perhaps capital starved by their parent for a number of years, and therefore weren't performing to their potential, but still were solvent and able to continue operating. And so I guess that's the beauty of the business rescue process. It was able to protect those businesses, provide them support to keep operating throughout the business rescue process. And while that was going on, we were negotiating with the business rescue practitioners to acquire those businesses from Murray & Roberts and its other subsidiaries out of the business rescue process.
And as I understand, you actually bought some of that debt, which effectively gave you a seat at the table at the same time. Was that an important part of the process?
Yeah, look, I think it's a vital part of the process because it gives you a seat at the table, as you said. Mm-hmm. And at the same time, it was necessary for us in order to provide what's called post-commencement funding into the business rescue process. So you can imagine when the group or business goes into business rescue, it goes in because it doesn't have liquidity. Mm-hmm. So someone needs to provide that liquidity. And that was a role that we played as well. So part of our approach to this was buying the bank debt to make sure that we had a seat at the creditors' table and then providing what's called the post-commencement funding to the business rescue practitioners to enable them to function and keep supporting those parts of the business that could still be supported. Mm-hmm. And one of those parts invariably was the cementation businesses that we bought.
I want to touch on funding. Before I do, I want to get due diligence because, I mean, the challenge here, you can do the due diligence. You can go kick the tires and everything, but you're not going to get any warranties, I imagine, because of that business rescue environment, which means your due diligence suddenly has to go up a level because of that lack of warranties.
Yeah, that's exactly right. And in fact, that's why the whole process took as long as it did. You'll recall Murray & Roberts went into business rescue, I think, in November or December 2024.
Yeah.
So it's been the best part of 18 months, right, until this transaction ultimately closed. You're 100% right. The business rescue practitioners can't give you any warranties because if they do and they're called upon, in theory, the creditors will end up getting nothing. And therefore, why would they vote in favor of the plan? And that means you've got to do a very, very thorough due diligence. And that's ultimately what we did. And it was complicated by the fact that this was a multi-jurisdictional transaction. We were acquiring businesses or legal entities in Chile, Portugal, Australia, South Africa, and Canada. So, it was a lot of work for a lot of consultants over a long period of time.
I hadn't realized it was that expansive because you mentioned up front, Cementation Africa, they are a real player in mining across the continent, but seemingly broader than that as well. And to the point, it wasn't a bad business, it was a bad capital structure perhaps.
That's exactly right. And that's where we saw the opportunity. Good business stuck in a poor capital structure or a distressed capital structure. And it's actually thanks to the business rescue process and I guess the business rescue practitioners as well that, we were able to save those businesses. And that's really, really good. Good news for us. Mm-hmm. We've got a business that we think has got great prospects. We've bought it at a good price. Jobs have been saved. So those parts of the Murray & Roberts group that could be saved ultimately have been saved as a result of this.
And funding, as I understand, it was a listed hybrid preference share that you've used as part of the funding?
Yes, that's right. So, look, given the state of the business rescue process itself, to use any debt funding was just not going to work, right, as you can invariably understand. So it was necessary for us to finance this with equity funding, and we were able to use quite a unique structure that was put together by consultants we worked with called Redding Capital, whereby our clients came into the investment through a preference share that's listed on the JSE, through an entity called the Summit Issuer.
Gotcha. And now it's a case of, what now? You now have the operation. It's sitting within the broader Differential Capital. You run some hedge funds. I've chatted with some of your colleagues before, a lot of data analysis and the like. Do you hang on to it? Is there a listing in time? Are you a long-term holder? What's the thinking about the future?
Look, we are long-term investors in this, and we put together a specific consortium to execute these transactions. And those investors who are behind that are pension funds, very patient capital. So we're not under any pressure to, let's say, de-invest or disinvest at any point in time. That said, the market for this sort of services has turned very, very sharply upwards over the last, let's say, 18 months to a year.
Yeah.
You're seeing commodity shortages in many parts of the world. There's definitely an angle around resource nationalism, which works in favor of these sorts of businesses. So there's lots of work out there. The order books are looking as good as they ever have. And so, one thing we are exploring, and it's probably going to happen quicker than if it does happen, it'll happen quicker than we initially anticipated, is bringing this combined entity or this new entity back to market within the next year to 18 months. And by that, I mean a listing.
Yeah. And importantly, your speciality is not in digging holes across the continent for commodities. You put management in. You're their shareholder 100%. And you put the expert management in.
Exactly right. We know what we don't know, and we know we don't know that much about digging holes, as you say. Mm-hmm. But we really back the management team that came with the businesses that we bought. We've actually appointed the CEO and the CFO of the South African entity as effectively the group CFO and the group CEO. And we're going to look to them to take this business forward. That includes working together closely with the other parts of the group in the other geographies to see what synergies we can extract, how they can work better together, how they can approach clients more efficiently and more effectively. So we think there's lots of opportunity there, just internally, let alone where we lie in terms of the overall market.
You are ahead, I said in the intro, Special Situations Fund. I can see how this is not the normal sort of, you went off to market and picked up a position in a listed business. Is this the sort of, size and scale that you're looking for? Or is this a standout even for yourselves?
I think it's fair to say this was a standout, even for ourselves. We would generally be slightly smaller, but, it's nice to do a big deal, especially one that we think is going to generate as much value as we believe this will.
Yeah. Well, leave it there. It's Mark Salmon, Head of Special Situations Fund, Differential Capital. Appreciate the time. Let your money weather the storms with Stanlib Asset Management. Invest in the Stanlib Global Select Fund, a diversified all-weather equity portfolio submanaged by JP Morgan Asset Management.
Moneyweb now on the money.
Some Friday thoughts for me. Two big pieces of AI news in the last week that both matter. And I think both are they're turning points. And I think they really do indicate where we are going with AI. The first is OpenAI ChatGPT 5.6 Soul, which is their frontier model, plus an even more advanced but not as yet released model, was doing some internal testing at OpenAI. Now, this is fairly common, except, and here the model was doing just fine. It was passing the tests. Everything was going great. It then discovered a zero-day exploit and decided to break out of its sandbox, essentially hack its way out, got onto the internet and went and hacked Hugging Face. Hugging Face is kind of the GitHub of AI. It's where you download models and the like. And hacked Hugging Face looking for answers to the test that it was doing. It wasn't malicious in the sense that it didn't want to delete Hugging Face or anything, steal records or the like. It was just looking for answers to the test it was looking at doing. But it is a really, really big deal that it did this autonomously and, frankly, successfully. OpenAI has said that it expects exploits like this to, and I quote, become more commonplace with the proliferation of increasingly cyber-capable models. Okay, that seems suitably scary. Okay, so we're just going to get hacked into obliteration by AI. So then the other piece of news was the launch of Kimi 3. This comes out of a Chinese company called Moonshot AI. This is, in many senses, another DeepSeek moment. You remember when DeepSeek came out, was it January of last year, and the whole world panicked because we suddenly realized that, wow, hang on a second, there are open weight, much cheaper models out of China. Kimi K3 is really, really good. It's not a frontier model. It is not a ChatGPT 5.6 Soul or an Anthropic Fable 5.0, but it's only one step behind. The point is that step is probably a couple of months, maybe 3, maybe 6 months. Now, it'll then get to the frontier model, and those frontier models would then have moved on. But you get what's happening here. If you're happy to be one step behind the frontier model, what you're getting, this model, this Kimi K3, costs about 95% less than a frontier model. I pay about $10 for 100 tokens, and I can get on Kimi K3, in theory, I can get the same number of tokens for 50 cents. 95% cheaper. Moonshot AI will release the open weights on Monday, or so they say. That'll make it available for everyone to use. You can run it on your own servers. You need quality servers, but you certainly can. Open source Chinese models now account for almost half of all enterprise token use. This we get the data from OpenRouter. It was less than 5% at the beginning of last year when we had that first sort of spook when DeepSeek came. They've 10x'd in a year and a half. China's winning this AI battle. It's turning it into an absolute commodity. It is crushing prices. It is giving high quality, almost frontier-like at 5% the cost. OpenAI and Anthropic just can't compete. They can't compete when the models are almost as good and 20x cheaper. China's turned AI into a commodity, and they I wouldn't say winning. They've won that battle. That's it for today. Yesterday we were chatting with Mark Diogo. He is CEO of BitX in South Africa. We're talking digital ownership and tokenization of assets as the future of investing, but not shares and ETFs. That's boring. Paddle courts and wine farms. We asked you if you owned any tokenized assets. Over half said you don't know what they are. A quarter said not yet but keen, and the rest were saying, yeah, great innovation. Have your vote, have your say. LinkedIn. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. We're live every weekday morning, the Moneyweb website and the app, 6:30 a.m. podcast just after 7. Thanks to my team, Eddie Nobokle, Nicole Sabu, to you for listening, my guests for their time. My name is Simon Brown. This is Moneyweb Now. If you're loving the show, please leave us a positive rating in your podcatcher of choice. We'll chat again Monday, the Peregrine Investor Letter.
You've been listening to another Moneyweb Now podcast, posted every weekday at 7 a.m. on moneyweb.co.za. Moneyweb Now, on the money.